Okay. So here is the trade I took this morning. I'll kind of go over why I took it. So we could start on the weekly because it's Monday, so might as well. All right. With this previous weekly candle here and the way it closed, we're now technically bearish on the weekly. Okay. If I go to the daily, we're definitely bearish on the daily. Close below this low, close below that low. When we close below this low, this is when it really became bearish. Or excuse me, look at this, close below this low. So it became bearish December 18th. So it's been bearish for a while on the daily. Weekly, it just became bearish last week. This is all based on breaker structure. Now, on the daily, I had this as a target, this low here, and then I also had an intraday low that I was targeting. You'll see on the 1 hour, I was targeting this low here as an intraday low. And what I need to see is I need to see my model take place inside of a higher time frame PD array, which in this case is a 1 hour fair value gap here, right here. Okay. And you see how we respected that for multiple candles here. I also want you to be aware of there was a big move overnight, okay, on a Sunday. Kind of abnormal, but that's what happened, right? So it makes sense then why you see the 9 a.m. candle here and the 10 a.m. candle. Look at those. I mean, those are ugly candles. And it's because the market is in a bit of like a seek and destroy algorithm right now because, again, we moved so much overnight. And it's a Monday. So 2 reasons why price might be a little bit choppy, and clearly it's showing that it was this morning. We'll see what the rest of the day has in store for us. But yeah, respecting this 1 hour fair value gap, that's the most important thing to note. So on the 15-minute, you can see this high here. We didn't take it when we came up for it at 745. You see we created just liquidity here. So I waited for us to take that liquidity. So once we came up there and swept at 10 a.m., I was looking for sells. And I wanted to target, again, these equal lows here. Now I had to wait for a break of structure on a lower time frame. I actually got in off the 2-minute here. You'll see, again, swept that high. This is the line that's marking that liquidity here. We swept it. Then we ended up closing below. This again, I wish this could go, hang on. Just for a quick second. This candle here, I count that as a close below this low. And therefore count it as a break of structure because the candle closed below the bodies of, the body of this candle closed below the body of these 2 candles. Therefore, I count that, even though we didn't close below the wick, I count that as a break of structure. And so I got in off of, let me actually move that out of the way again. I got in off of this inversion fair value gap. You see it's pretty clean inversion fair value gap. So once we traded back up into that, since we had broken structure, I was able to set a limit order right here. We traded back into it. And it gave me very minimal drawdown. And it went my direction fairly quickly. I took partial profit. I had 2 contracts on this trade. I took 1 contract off, and I had a limit order here to buy 1 contract. So I took 1 contract off right here. Actually, I think it was right underneath this low right here. It wasn't exactly at this line. And then what I did was initially I put my stop loss above this high, because that made sense. It created a new high once we closed below this low here. I didn't want it to get trade above there. And then we started to get lower. I just wanted to protect the trade, so I put my stop loss at break even eventually. And so that's kind of where it left us. So here's the actual execution on the funded account. You can see, again, got in right here. And then took a contract off here. And this candle is what hit us break even. So only plus $100 in the day, whatever. Profit's profit. Again, you could see price is fairly choppy this morning, so I'm glad to have walked away unscathed and with a little bit of profit. So that was the trade.